Good afternoon, everybody. My name is Jason Allen Jankowski, Forex analyst and trader. Today we're going to be doing an open forum sort of event I call Training for the Pro Traders Toolbox. And of course, you don't have to own the toolbox to want to learn more about it. So coming to a training session can be very helpful. I know we have some people in here today that have just recently purchased the toolbox or have owned it over time. And the purpose of this broadcast is to acquaint you more with how the toolbox thinks and what to look for so you can get the most out of the signals when they're there. As I mentioned before, you can put a comment or a question in the Q&A box anytime you want. And with that thought, let's go ahead and get right to work. First thing, of course, trading in foreign exchange or any leveraged market really is considered speculation. It's a risk investment, so it's not suited for all investors at all points in time. So you want to carefully consider if trading is right for you in light of your personal financial position and your tolerance for risk. People can and do lose money. In rare cases, they might lose more than they invest. Everything we talk about in here is considered opinion and is subject to change at any time. I want to go ahead and get right to work. For you guys that are regular listeners, you may have heard this before, but I want to ask you to indulge me just for 2 minutes to acquaint the new guys with what I think is some important things to know about the toolbox. Now, if you're currently using it, you know, this is a great way for you to gain a little bit better edge. If you're new to the concept or have never seen it before or interested in learning more about it or deciding what you want to do, I think it's important for you to know the person who wrote it, meaning me. It's important that you know a little bit about my background. And the reason I say that is because when I started in this business, I started as a customer just like you, and I had to go through, if you've read any of my books, you know, I went literally through hell trying to learn how to do this. And I lost money for years. I became a registered rep, and I got on the phone and raised equity and became a commodities broker, which I don't do anymore. And I lost money for years, both my own money and, sadly, customer money. And the nature of the business is such that, you know, we're all looking for an edge. We're trying to find a way to get better connected to the market and make the most money possible. And we have an illusion that we operate under. And I talk about this in my books, Time Compression Trading and the Art of the Trade, as well as Trading Rules at Work to a little extent, is that illusion is that the more we know about the market, the easier it's going to be. And I believe that for many years. And of course what happened is I spent huge amounts of money buying systems and books, and tapes, and video series, and attending live seminars and weekend retreats and one-on-one coaching with traders. I've done everything that I thought was required to make money in this business and never really was able to succeed. And then one day the light went on for me, and I came to understand what the true nature of this business is really all about, which I talk about in the Art of the Trade, and the issue of zero-sum transactions. What makes the toolbox unique, in my opinion, is that the way I wrote it is to take advantage of underlying psychology in the market. There are certain things that are going to happen in price action that are clues to underlying psychology. And it can be very helpful to have a real firm idea and a real solid grasp of what that psychology is when you observe the signals. And we're going to talk about what we're going to actually show you some charts here. What we're going to talk about is how to use the signals. And the reason the signals are there is because the toolbox is trying to exploit that underlying psychology. So if you don't know anything about that, but you're reasonably good at following the signals, it'll still give you an edge. But if you take the extra time to learn more about underlying market psychology and personal trader psychology, it'll help you to better make use of the signals. And it's important that you understand, too, the toolbox, when we talk about training on it, you know, we don't have time to go into all the theory and details behind it. Unless you ask, you got a specific question, I'll cover that. But for the most part, I think it's important for you to know that my background was just like yours. I started as a customer, just like you, trying to figure this out, putting my time and effort into what I thought was the right method to learn, and discovering later that that really wasn't how the markets function. And so I wanted to create a systemized approach for myself that was based more on the underlying psychology in the market, and that's the end result is the Toolbox. So here's some basics. If you just bought the Toolbox recently, it should be up installed and running properly, but if not, there's a couple of things you might want to just jot down while we're on the line here. If you're using it on Trade Navigator, it runs on 4 platforms: Trade Navigator, TradeStation, Multicharts, and MT4. If you're using it on Trade Navigator, you have to import the templates into the Navigator platform. The manual to do that is on the website, my website, as well as the manuals and short videos on the other platforms. I'm going to show you today using the Toolbox on Trade Navigator. You might want to talk to Genesis Financial Technology Support. GenesisFT.com is their website, and here's their telephone number for their office in Denver. If you want to use the Toolbox with TradeStation, Multicharts, or MT4, you got to get a copy directly from Progster. Actually, his name is Steve, but he goes by Progster, which, from what I understand, all programmers have a handle. And he's at codefortraders.com. If you go to the codefortraders.com website and say, hi, I bought the Toolbox, or I want to buy the Toolbox, how do I install it? He'll help you do all that. He'll create a copy for your platform. He'll walk you through the installation process and make sure it's operating properly. It's important to have a couple of basics about the Toolbox available in your mind all the time. Use the template designed for the currency pair selected. There's 5 templates: pound, euro, yen, Canadian dollar, Swiss franc. Make sure you use the template for that particular pair. Each template is slightly different. Otherwise, you could get false signals. You get signals that are not as accurate. Your stops might be way off. It's, of course, if you want to use the suggested stop feature, your stops might be further away. Also, there is an error on the Trade Navigator Canadian dollar template that we're fixing. So you want to, whatever the suggested stop is, I'll show you this in a minute, you want to reduce that by a factor of 10. And we're going to fix that. Also, if you're going to use Trade Navigator, get the maximum data set you can from Genesis FT, and they'll make sure that it's historically accurate for you, and they'll give the most accurate signals. You'll also need to change the number of days for intraday data. There's a feature on Trade Navigator that says, how many days do you want me to go back on this hourly chart? And it defaults to 10 days. You want to make your default setting for intraday 200 days. If you're running TradeStation, use the radar screen. That's a nice benefit of running the Toolbox on that platform. What the radar screen does is it keeps a watch on all the signals from a particular pair on every time frame if you set it up that way. It's easier than toggling back and forth between multiple time frames, which is part of what I'm going to show you today. Multicharts MT4, they got backtesting features on Multicharts. If you're creating templates in MT4, that'll save some time and speed loading the Toolbox on multiple pairs. The idea here is just to make best use of the background system. Now, regarding the signals themselves, and I'm going to show you a few right now. We're going to spend most of our time on that. It's important that you write this down. What we're looking for is called conflict and congruence between time frames. Now, have any of you guys read my book, Time Compression Trading? Anybody out there read that? I often call this confluence and congruence, but it's conflict and congruence. Okay, a couple of yeses coming in. Great. What we want to do, the reason I ask you that is because you'll notice in the book Time Compression, one of the things I talk about is the relationship between the winning trader and the losing trader. The winning trader is doing things differently and making his choices to participate differently than the losing trader is. Part of that is disclosed in multiple time frames. Now, you can use the Toolbox on any time frame, and it'll give you signals that you can get a lead on. But the issue isn't what the Toolbox says on a 5 or a 10-minute platform so much. as what it says in relationship to a larger time frame. And that's what I'm going to show you right now. Let's have a look here at, I believe I got yen up or Canadian dollar. Okay, I have Canadian dollar on the screen. Can everybody see Canadian dollar? You should be able to see it. I just want to make sure, because if I don't have my screen on properly. A couple of yeses coming in, okay. All right, here's the issue with initially starting your analysis using the toolbox. You have to decide which time frame is going to be your point of reference or your starting point. I use the 60-minute time frame. This is a 60-minute, 1-hour chart. I have on my charts, which you don't have to have on your chart, I have it on mine, is 3 moving averages, and then occasionally, you see I'll put other technical things up like support and resistance areas, that kind of thing. The moving average, the blue one is the 50-bar moving average. It's a simple moving average. The red one is 100-bar, and the green one is 200-bar. Now, when you take a look at basic understanding of the markets, a moving average is considered important for the issue of whether or not a trend is developing or is ending. When a trend is developing, you like to see the moving averages, whatever they are that you choose to use, you want to see them stacked in relative relationship to that trend. In other words, the 50-bar would be over the 100 over 200, and this would be uptrend developing, right? You'll also notice that we have what appears to be a support level here, and we have the toolbox giving both signals on both sides. Green, of course, buy signals. Here's a hook reversal signal on a 60-minute time frame. And there's also red trend sell signals. And I want you to notice something about these sell signals. First of all, I want to draw all this together as a conclusion factor, but the important issue is to understand what makes the signals valuable and what makes them less valuable. This H reversal down here happened to be the low print for the quarter. In my opinion, if you're looking at a market that has been downtrending to a significant low print, the buy signals are probably going to be more accurate at that point than a sell signal advocating continued trend. So I'd look at this and say, well, there's a reversal starting to try to develop here. We don't know if it's going to develop yet, but it's trying to. So the H reversal says this is a hook reversal. It's time to maybe consider the long side. These sell signals are the lowest sell signals that the market saw on the hourly trend into that low, but they're considered accurate because the market moved lower from those signal points. You see that? And then over here, this little blue box indicates a negation of these sell signals. One of the things that the toolbox has that I think is important for you to understand is the concept of negation. What that means is these sell signals, the little blue box here, whether you see it on the buy side or the sell side, it basically means that that signal is not as valid. It doesn't mean the market can't continue to move lower. It means it's less valid. And the important issue here is to understand probabilities and to think in terms of probabilities. I don't recommend that every time you see a signal you just jump in. I recommend that you learn to use the signals and understand how they work best. This is a cluster of sell signals as well. A cluster is usually more accurate. A stacked signal like this is where a trend sell and a strong trend sell both came together on the same bar. That's usually very accurate. And you see we did have a little decline in the market, but no new low. So maybe these H reversals are better. Maybe that H reversal is saying, well, here we are at a 3 or 4 month low, 5 month low. It's time to be a buyer in the market, not a seller. Over here, as the market's coming off the low, it might be developing uptrend. And we can see strong trend buy signals here, a regular trend, a stacked trend. And as the market advances, here's the high for the week. And we have what's called an X reversal into the high. Now, that doesn't mean that the trend is over. It just means If you were looking to sell, there's a reasonable shot at taking a short position here that may prove valuable. And on a 60-minute time frame, if you took this X reversal, you'd be looking for this market to continue down, maybe back to the bottom of the range. So you'd be like short somewhere close to the 99 handle and maybe looking to buy it back at 98.35. Notice right after the X reversal, we have a new sell signal that is flashing on and off, and we're at 1:15 in the afternoon. So if that signal was still there at 2 o'clock, I would be tempted to call that a valid signal. It's adding, or a place you could add to a developing uptrend. So if you use the toolbox exclusively to say, okay, what are the signals? You want to be buying when you see clusters of trend signals or stack signals if you can get them. And you want the market to cooperate on the new signals. So you'd say, as long as the market is rising and we keep getting buy signals, we want those buy signals to be slightly higher each time. Same is true for sell signals. You want them to be slightly lower. You'd like to see clusters when possible. If you're looking at the market being near a reversal point, you're looking for that market to have some degree of push in that direction that validates that trade or gives you confidence to hold that trade. In other words, if this H reversal was here, and then instead of having this negation factor, we had a new low print, I would say that that H is probably no good anymore and you might want to liquidate. Again, one thing you can use in addition to the toolbox is some form of moving average. So now you've got 50 bar over 100, 100 over 200, which would indicate maybe a developing uptrend. And we have a buy signal coming on, and it's a regular trend buy. So we might have, this might be the place to begin building a long position. The X reversal at the top doesn't necessarily mean the market is going to reverse. It means there's a good probability of a pullback from there. So if you're bullish and you bought over here and you're adding to it here and you see the X reversal, that would be a caution flag. You'd say, okay, well, I'm going to wait through that potential and see what the market does. If the market then were to hold some sort of pullback that doesn't make a new low, the trend may still be in place. And that is what I think this signal is trying to tell you right now. As of right now, there is a good probability that this reversal pattern here was a signal to be cautious, but the trend is not violated yet. Now, when we talk about multiple time frames, what we want to see now is congruence with this argument as we go up the time frames. So we go to the 120, and this is the error here. These stops are off by a factor of 10. So these would be closer over here than where they're supposed to be. We have to fix that. So here we have the 120, and we have a reversal pattern last week. More trend here, but again, the market has been negating on these trends. The X reversal here is in great congruence with the X reversal on the 60-minute. In fact, they're on almost the same bar. So why would that be important? Well, what it would tell you is that there's two time frames that are saying there's at least the potential of a pullback here. So if you're long, take that under advisement. If we go up to the 180, we see the H reversal last week right in the same area that the H reversal was on the 120 and on the same bar that it was on the 60-minute. And you have the same congruence on the negated sell signals, correct? So that's a good clue that maybe a bottom is forming. If we look at the 240, oops, went too far that time. On the 240, you have an X reversal. So if you look at the actual traded low for this time frame, or for this market, there was a good clue on the 60-minute that maybe a bottom was trying to form that also had good congruence on the 120, 180, and 240. So we have 4 time frames in agreement on the buy side as being more likely. The sell signals, although they were coming on, you can see that they're also in about the same area, but they're either being negated or the price itself is advancing. Here we have a trend sell, and now we have, in just today, actually, since the last 24 hours, we have a cluster of trend sells, strong trend sells, which, by the way, are the first strong trend sells the market's had in, a couple of weeks, right? Since the reversal over here that said you might want to consider a short position. So that may mean that the trend is going to resume. So if you look on the other time frames, you have great congruence on this pair right now. The buy side shows buy points fairly close, and it turns out to be at this point, a near-term bottom. And you have sell signals that are congruent at about the same point. And those sell signals might be saying caution, not necessarily resumption of downtrend. You follow me? Now, if we look at the daily, we have a daily strong trend buy developing today. That's flashing on and off. It depends on where the market closes. So if we close like right in this area here or higher, this market by the end of the day might actually have 5 time frames saying you might want to be long dollar CAD in here, right? Or stay long. If you got long last week and you held it into this week, or you added to it Tuesday or Wednesday this week, it might be good to just hold it or add to it on the close. Now the daily time frame is suggesting there's some opportunity. What's interesting about this is that if you look on the really big picture, we have the low for the year, the Toolbox called the low for the year in dollar Canada. Market rallied up to a high. Sell signals were there and gave you maybe some short-term opportunity, but they didn't negate the downtrend. Now we're getting buy signals coming on. Maybe some are early. This one might be perfectly positioned. So if you bought this low print down here somewhere, which was the low for the last month and a half, 2 months, this might mean that the market is preparing to advance maybe through the end of the week and into next week or the end of the year or the end of the month. Now, if we contrast that with lower time frames, we're going to look for what I would call conflict. When we look at the 30-minute is saying you want to be long. So we actually have a lot of congruence. See the clusters and the stack signals? A lot of congruence on the 30-minute saying you want to be long. On the 15-minute, we're starting to get conflict. In other words, the buy signals are failing, and the H reversal is congruent on the sell side. And that's on a 15-minute. On the 5-minute, time frame, you can see that the market will give you signals on all over the place, and it's a harder read. I think anything under the 60-minute time frame, maybe you could use the 30-minute. Anything below that, like if you put a custom time frame, 3-minute, 7-minute, 2-minute, you're going to be getting signals that I believe are very difficult to trade. If you're going to do that, if let's say you're a day trader and you like the idea of day trading and you want to use the Toolbox, your best bet on the Toolbox is to never use the trend signals on a low time frame. Use the reversals. Go X to X. In other words, buy the green X's, liquidate and reverse on the red X's. Buy the green X's, liquidate and reverse on the red X's, or XH's, or H's. Let's put this back up on the 60-minute here. And we have a question coming in. So let's go ahead and have a look at that real quick. Alan says, I'd suggest that it is a good buy since dollar CAD is in a corrective wave right now. Stefan says, I'm back. He had just dropped off and then came back on. Okay, one quick thing, guys. There's nothing I can do on my end to help you with connectivity issues. It's almost always bandwidth on the receiving end, unless I absolutely lose my internet connection, in which case I could never tell you anyway, and you never hear me. The best way is to just sign out and sign back in, which is which Stefan just did, so we're good. All right, Alan, the one thing I want to draw your attention to, though, is that when you say it's in a corrective wave right now, in my opinion, if you decide to use the toolbox, you don't want to use what you would consider commonly accepted methods of analysis. In other words, if you're a big Elliott wave guy and you buy the toolbox, you want to be really careful not to use Elliott wave together with the toolbox. And the reason being is that you're going to get conflict all the time. Elliott wave is going to tell you to stay short or be out, and you'll get a buy signal from the toolbox that'll be more accurate. You know what I'm saying? So I strongly suggest to people, if they own a copy of the toolbox or they want to consider using it, that their best course of action is to not use it with other forms of analysis. You'll notice I don't have any other form of analysis on here other than the moving averages, which help me with the issue of whether or not we're developing trend. So if we're developing trend, we need to know that. If that's the case, I want to take trend signals. If we're reversing, the toolbox is going to tell me some great places where that might be the case. So if I get a reversal signal while we're developing uptrend, that's a caution flag. That doesn't necessarily mean that the uptrend is over. It just means this is a point where selling could come in to correct the market, maybe correct it back to a buy point. You know what I'm saying? So if you did that, that's one method of thinking. If you then overlay Bollinger Bands and all that kind of stuff, I think you're going to end up with more confusion than you do confidence. And the whole idea is to eliminate the confusion. So I'd be real careful with how do you come to a conclusion that it is a corrective wave? What does that mean? What led you to believe that that's true? If it's something that you've come to trust and you like it and it works for you, what you'll find when you begin using it with the toolbox is you're going to end up with conflicting signals. Now you're going to get confused. And I'm just always cautious to remind people not to do that. On my chart, I don't have anything except the toolbox, and I draw resistance and support where I think roughly it should be. And that's basically all I'm doing on this is what anybody else would do: draw support and resistance at previous highs and lows. That's all. I do a little bit on my own where I try to I see where the range might be for support and resistance. But in this case, this is almost like a textbook buy here. You got to break out fresh high for the week, pull back to test the resistance area, and you're getting a buy signal, and the moving averages are in congruence with a possible developing uptrend. So I mean, there's a lot of reasons, a good probability to be long. That doesn't mean the trade's going to work, but it is good probability. I want to use a Euro futures for my next illustration. And on Euro futures, this is a 60-minute Euro futures chart. I start 60 minutes. And this is the market coming up into this, 8-month high. Now, I would not buy an 8-month high. I wouldn't. Because I know the larger time frames are typically looking to sell into that. So if we look at the sell side of Euro, here's the upside breakout this week to a fresh high, sell signal in play. That didn't work. Next one gave you a 100-some point lead. The buy signals, which are the highest buy signals in 8 months on this time frame, said go long. We didn't get a new high, and the market returned to where it started from. Could be a good clue that the buy signals are losing steam. In fact, we had one of them negated. These two over here from last week, great clues. I wouldn't have bought that. In fact, I didn't. I was short into this high. I shorted up here. I didn't buy these because, again, this was a 7-month high. If we look at the 120, you can see the market is starting to stack up signals fairly close to where the turning points might be. Sell signals negated, buy signals negated. Usually that means the reversals are more likely. On the 180, great congruence for a top trying to form this week maybe. 3 of the top, actually 4 if we go to the 240. The 240 had 3 X reversals and an XH stack reversal this week, and the market has stalled at the 8-month high, and the toolbox called that top on 4 time frames. That's a really good clue. If we go down the box, down the lower time frames, here's some conflict developing. We have buy signals, not a lot of sell signals at the highs. We have buy signals as the market's coming down that are being negated. That's good conflict. Here we have a sell signal, 30 minutes, the first sell signal on this time frame going back all the way to over here on the 10th of December. On a 30-minute time frame, you know, that might be developing a degree of congruence with what's happening on the overall big picture of a topping market, which might be happening here. On a 15-minute time frame, again, as we get into smaller and smaller time frames, you want to go more with the reversal signals than you would on the trend signals. This one is suggesting you might want to be long right here. Now, in my opinion, buying this price area after the market has reached into an 8-month high and been rejected twice, hardcore, both days, 2 days in a row, this buy signal might be late. So this might be considered conflict. On a 5-minute time frame, again, you almost never want to use the trend signals because they'll be all over the place. But the X reversals to X reversals are very good. Also, I want you to notice here on the 5-minute time frame, see this little blue diamond? Can you guys see this blue diamond? I hope you guys can see this. On the multi-charts, MetaTrader, and TradeStation, this would be a blue E, or an E. It'd be, I think, a red E in the case of MT4. That is considered an exhaustion reversal. So here on the Euro futures, we've got some good congruence on the high time frames for a top coming in, and on the 30-minute, 15-minute, 5-minute, you know, we have a little bit of confusion and some conflict saying you might still want to be long. But this little blue diamond here, or on the other platforms it'll be an E, that E is really important. This blue diamond is really important. That's called an exhaustion reversal. The exhaustion reversal is rare. It doesn't show up that often. When it shows up, it usually has something like an 85 to 90% probability of the market seeing price action in that direction. That doesn't mean that the market can't continue before finally topping or bottoming, but when it shows up, you got to be really ready to make your move. Here it shows up here on the close yesterday, or actually it's 7 o'clock to start, or 7 a.m. This morning, overnight. Market had a little bit of a lift, and then it's been straight down ever since then. And here we are, you know, just off the lows of the day, putting in just a little bit of weight. We're actually, if you look at Euro today, just to calculate the numbers, 132.41 in cash, which is right about where we are right now at 32.55 or so in futures, is halfway between the high and the low. So for those of you that know candlesticks, if you get a market that opens, makes a low print, rallies to some high print, and then closes in the bottom 50% of the range, that wick usually indicates some form of pressure. In this case, selling pressure. Since we're getting 2 days in a row where that happened now, well, depending on where we close, but 2 days in a row where that happened, Wednesday and a Thursday, and Friday's coming up, and all the news is out, and Euro could not extend higher as the buyers Monday and Tuesday thought it would. There's a real strong probability that the market is exhausted and it's going to reverse or at least sell off enough to justify a short position. That's what this little blue diamond is trying to tell you. Now, of course, it's like anything else. We don't know till it gets there. But the important issue here is to show you why using the suggested stops might be important to you. If you were to be a buyer, let's say at a 5-minute time frame, you started at the, early this morning, you went long, right? And here's your stop. You had a nice open trade gain of some amount. Then you decided to liquidate. Then you got reasonably sure to go short. Your stop would be up here. You'd take a little bit of heat, but in the end, you're actually doing better by holding it. See what I'm saying? So it's not that you can't use the toolbox on a 5-minute time frame is that you have to understand the signals in such a way that you use them more effectively. And it's important to look for clusters and stacked signals. I wish I had time to take the Canadian dollar. I don't know if we can get it anymore because it's such an older chart. If I go to the daily, it may not be able to go back in time. I'm going to go back to, it may not let me go all the way back to 2007 on a daily chart. Well, it looks like it might, but it might take forever for this chart to load. But I want to show you something. 2000. Okay, let's go with December 06 and see if it'll load. December 06. Okay. This is the daily. We're back to July 05. Okay, hold on. 06, here's 07, and there it is. Here's a daily chart on Dollar Canada with an H reversal and an exhaustion reversal on the same bar. And look at that price level. If you could have traded it, you could have held it, whatever you wanted to do. The point is, the bottom line is the toolbox called the absolute bottom in that market. It took some time to do that. Look at the reversal patterns. It just didn't work. But once the blue diamond showed up, I mean, that market never looked back. Here we are a year later from 90 handle, high prints close to 130. So there was 40 handles, 40 full handles of upward price potential that we found on the low. Now, I'm not saying anybody would hold it that long. I'm not saying that we're all that good at traders. What I'm saying is, if you understand how the toolbox is thinking and you're willing to work with it and learn and understand it, you can see where it'll call some great trades that have got a lot of room in them. So if there's a lot of room in them, how much of that can we get? And of course, you get them on the other side too. Here's a great cluster of sell signals that called the high for that month, for a little bit all the way down to the low for the month. Here's another one. X reversal gave you a great lead until these buy signals came on, which didn't work. These buy signals did. Strong trend did. Another X reversal gave you a lead, right? So, I mean, you have to decide, how best you feel it is, how best to use the signals when they're there. What is it that's going to be your best call to action? What's going to be your best process in the market? Because what I've discovered is that if you're willing to use the higher time frames as your guide, if you look for congruence, meaning the 60, the 120, 180, 240, all have sell signals at roughly the same area, and when you get the buy signals in the same pair somewhere under that market, they're late and they're negated, right? Very helpful. You need to use some common sense too. When I showed you that illustration in Dollar Canada where the blue diamond was, the exhaustion reversal, that happened to be a lifetime low. I talk to guys all the time and they say, well, why were you short? Well, it was making a lifetime low. It was going to drop further. Like, well, what idiot sells a lifetime low? You don't sell lows, you buy low. So when the signals come on to go long, those are good bets. You'd want to ignore the sell signals after that, or maybe not until you had some reasonably nice move. Well, on that particular low, if you would have held it for 4 weeks, you could have made 10 handles. Now, I'm not saying that that's going to happen all the time. What I'm saying is that there's certain things that you want to look for. There's certain things that you want to stay focused on, and there's certain things that by using your common sense will help you get the most from the signals. But my important thing to communicate to anyone who's using the toolbox or who wants to learn to use it is that your point of view when you bring it to the table is the important issue. So if you want to trade on a 5-minute or a 10-minute, a 15-minute, or 30-minute point of view, that's fine. The toolbox will find you some opportunity. You still want to look at the 60, the 120, and the 180. Because if you're thinking about going long on a 5-minute time frame, what if you see a lot of sell signals up near where the high is and you're trying to go long, 35 points under the high and you're expecting a fresh high, and that's an 8-month high? It's maybe not the best trade. It's okay to let that one go maybe. You see what I'm saying? So I would say that you want to use some common sense. It doesn't matter what time frame you want to use it on. You'll find opportunity. What you do with that opportunity and how much you can get from it really is a factor of your money management and your discipline, and that's a different issue. But the toolbox will give you a lead on a regular basis. If you had some very basic money management rules, like if you're operating on a 60-minute time frame and you're willing to hold overnight, you leave your stop out of range for 24 hours. Then you roll it to break even. And if the trade's still working, you look for the next place to add to it. You know what I'm saying? Very basic money management rules. If you're going to be a day trader and be flat at the end of every day, always pick the buy signals that are close to, or the sell signals that are close to the actual traded high or low for the day. In other words, if the market gives you a red X and that happens to be the traded high for the day and you're in a 5-minute time frame and that X shows up, look at the 15-minute, 30-minute, 60-minute, see if there's an X trying to come on there. That might be the high for the day. So you might be a seller there, reasonable stop outside the range. Once the trade gives you 15 or 20 points, you just take it. Because as a day trader, you're not really going to be in for those 60, 80, or 100-point moves if you're day trading. You're going to try to put together 6, 8, or 10 trades over 2 or 3 days that all have 30-point potential or maybe a little less, but you're going to try to get a high percentage of them. So there's nothing wrong with that. It's just that my perspective is that you want to use what you're most comfortable with, but learn how the signals are generally more accurate. If I could show you a range market, and I'll do that real quick. I'll put up dollar-yen. And I want to go back to where the yen broke out. Okay. Here's the market establishing a range. Here's a reversal buy near the bottom of the range. Nice little move here on 60-minute. Came down to test this bottom. Went right up here. When you see this in an established range, see the top of the range here, hook reversal, market comes up, retests, and you get another sell signal, an X or an H at the same price area, top of the range, great place to go short. At the bottom end of the range, you're looking for the opposite signal if they come on. Here's the bottom of the range. Unfortunately, on the 60-minute, there wasn't any signal, and on the 120, there wasn't any signal either. So even though you were at the bottom of the range, maybe the 180 had one. Now, see, it didn't. On the bottom of the range, there were opportunities, but the toolbox didn't find them as easily as it found the top of the range in that case, right? So that's very close to very congruent with the other one up here at the top. Once the market broke out to the upside, you can see it tried to establish the top of the next range, and it's not coming back, So these trend signals here, you'll notice that we went. There was no signals on this 240 here. Going back on the sell side, going way back to early part of the here. This is October, and this is into November this year. On the 240, the buy signals were working. So if you were getting reasonable success on the buy side using these as caution flags on a high time frame like this, you could have been buying at the bottom of the range, maybe as the market was advancing a little bit. Once it broke out to the upside, you would just watch these as caution flags. You could still be long. You know what I'm saying? These right here from 2 weeks ago were the best buy signals in yen, I think, by far, even though this was near a high print. So it's important for you to understand you have to use the signals in context with your overall assessment of the market. But if you understand how they think and the issue of multiple time frames being a part of the plan, you'll be in better position to know how to exploit them. Now here, these are some of the highest buy signals on a 60-minute time frame that the market's had in, I think the whole year. If we look at the daily, where we're at is the high for the year, isn't it? Let me look at the weekly real quick. Yeah, we're at new fresh high for the year. So I wouldn't necessarily be buying there. I might wait for a pullback and then look for a green X or a green XH or even a blue diamond on the pullback and go long. You know what I'm saying? It's not that I would say you want to be seller here. I think you could be a buyer on a pullback. I think that's more likely in this case, you know. But as you can see, you know, last year the market tried to find the bottom, and then all we had were regular trend sell signals on a daily time. This is a weekly time frame. So on a weekly time frame, the market was still selling when last year it was saying you got to be getting long somewhere down here, and these were lifetime lows. Market had never been any lower, so the probability of higher price action is more likely. This would be considered conflict at this point. Now we're up at a high print for a year, so I'd buy the next pullback. That'd be me. So I'd be looking for the market to come down, and wherever it came down to, I'd be looking for, you know, green X's or green trend buys or whatnot as the market progressed. Okay, floor is open for Q&A. You know, we can take all the time you want. Here's the things about, I think, the toolbox that are some of the more important things. The most accurate trend signals are clusters and stacked. The most beneficial reversals are the X reversals, exponentials. The blue diamond or the E reversals are rare, but usually very reliable. H reversals, as you see, are often tested. So if you get an H reversal and the market gets a little bit of a lift and starts coming back down, that may mean that you're going to get another try for a low. That doesn't mean you got to liquidate. It just means, are you willing to sit through it? Your best bet is to always be looking for higher time frames to have a similar signal when comparing to your execution time frame. You're looking for lower time frames to show opposite signals near or around your execution time frame. In other words, if you want to be a buyer in the market because you're long and you see a buy signal come on hourly, if you go to the 5, 10, 15, 30 minute, you want to see the market offering more sell signals there than buy signals. Then you want to go up to the 120, 180, 240 or daily or weekly, monthly, and you want to look for congruent buy signals. You want buy signals that are roughly in the same spot. And I think the important thing is to use your common sense. You need to do that. It's a guideline. The toolbox is a guideline for an underlying type of market structure. It's attempting to isolate changing persistent psychology. And as always, you got to start by asking, where's the loser? I mean, if the market's in a steady uptrend, it's going to correct. Does that mean you want to try to find the top and sell into the high and wait for the break lower? Or are you thinking, I'm going to go with the trend at the next trend buy point? Either way is a reasonable shot at the market. But look at your high print. Is your high print inside the weekly range? It's not. It's halfway around the monthly highs or lows. It's nowhere near anything important. And you get a sell signal. Well, that's most likely that's just going to correct a little bit down to a buy point and not really mean anything. But if you get that uptrend like we saw in Euro, it comes all the way up to an 8-month high, and then you get sell signals on almost every time frame at the high and a big 100-point break 2 days in a row, that's probably indicative that the buy side is running out of steam. So you might want to be a seller in that case. So that's basically it, guys. For you new people, here's my contact information. If you go to my website, theliononline.com, there's a page there called the Pro Traders Toolbox page. And on that page are all the manuals for the supported platforms and short introductory videos on the supported platforms. Contact information to get a hold of Progster over at Code for Traders. That's what he does, is write trading code. There's no problem you're going to have that he can't answer with regards to getting the toolbox installed and running properly. All the other stuff I do, like one-on-one coaching, my Psychology of Trading course, which I do every quarter, that's coming up in Q1, and also the regular weekly wrap-up, you're welcome to attend. My last weekly wrap-up for this year is tomorrow at 4:15. There's a sign-up link on the site. After we're done for the year, basically this is the end of the week, maybe into next week a little bit, but after that, my next weekly wrap-up will be the 4th. So you'll have to re-sign up for 2013. But if you sign up for 2013, you can come every single Friday for the entire year. It's going to be I'm going to do my weekly wrap-up and performance summary for the entire year every Friday. You can come every Friday for the year and see how well I'm doing week in and week out. Let's see. David says, will my older version of PTT work on MT4, or is there something new needed? Okay, help me out here, David. Did you switch from Trade Navigator or one of the other platforms to working on MT4? Yes. Okay. Contact Proxter. Tell them, listen, I've got it running on Trade Navigator, but I want to switch to MT4. I don't believe, because he does all the work, so I don't know if he can do anything to help you, because I believe that they're two separate programming languages and therefore completely separate methods of structuring the toolbox so it'll reflect the signals. I would hate to say that you have to buy it again, but I don't know. I don't know. We'll have to ask him, because I mean he knows, and our pricing structure is what it is, and we're not trying to gouge anyone, but at the same time I can't answer that question. So I do know that you can't take the platform, the signal generator now, take the file, the GLB file, and run it on MT4. I don't know if it's just a simple fix that might take an hour or two of his time. You might have to pay him $100 or something for his time, or if it's just simply you got to buy the system over again. And if that's the case, I hate to ask you to pay for it twice, but you might have to do that. Hopefully that won't be the case. Yar's got a question here. He says, after H reversal that has been tested, we'll look for X reversal, or it can be any signal? Okay, the H reversals are often tested. In other words, you'll get an H reversal and the market may not just top there or bottom there. It may go a little further. If you see an X reversal after the H at some point after that, it's a little more reliable. If you see an X reversal and an H reversal stacked on the same bar, that's usually a very good sign that the bottom's finally in or the top's finally in. But again, as you guys know, a market, it's like a roller coaster. A roller coaster crests into the energy to push the roller coaster over the top happened at the bottom. So it'll run right up to the top, and it'll just keep going just a little bit further and then roll off, right? Well, sometimes the markets kind of grind into the high, so you got to have a disciplined approach to using the signals. If you say, well, I won't take the first H reversal, there's going to be trades that you do miss because of that. That's not necessarily bad, but if you're saying, I'm just going to take the point of view that H reversals are tested, so I'm going to wait for an H plus another reversal signal and then short it or buy it, there's going to be some trades you miss. So that's just for every positive that you put on the table, Yar, there's going to be a negative that you have to deal with. So if for issue of money management, you're saying, I'm just going to wait on the H's because they're often tested, fine. Then there's going to be a handful of trades that you just won't participate in. But you'll also be out of the market for more often when the market makes another fresh lower high that you could then exploit. So there's a benefit to waiting, but the downside is there's a handful of trades that you might miss. So that's up to you. But if you see H reversal and then it doesn't work and you get a new high and another H reversal, once you get 3 of them on the board, or it goes H, H, X, H, or H, X, H, once you get to the third reversal signal, you're getting really close. You know what I mean? Dave says, thanks. You're welcome. I wish I could answer that question better for you, but you got to talk to Proxter. Let's move this to here. For you guys that are brand new, here's my contact information. I'm still the only guy in this business that answers his own phone. Oh, one thing I want to mention to you is that I'm going to have a new telephone number after the first of the year. So if you dial in and you can't get me, you probably have to go to my website or email me because I'll have the new telephone number. My Skype will remain the same, of course, Twitter and YouTube. The complete video series for trading rules that work, that's available now too. If you haven't gotten it, it's on my Apple iPhone app. Talked to the developer this week, and they're going to be, very shortly, they're going to have the entire video series as an app, all 30 videos, as one app. Just buy the app. and that'll be at a discounted price as opposed to paying $2.99 for each video 30 times. You follow me? So I don't know when that's coming out, so you could wait if you want. It doesn't matter. The iPhone app is free, and you can get a handful of videos in there anyway that are free. So you'll get a taste for the series to see what you want to do. And some people don't want the whole series. They just want the ones that the titles make sense to them or the ones that they have an interest in. So that's why we do it that way. Any other questions, guys? We got a few minutes left if you want to take a comment or question out here. Excuse me. I noticed that we had a lot of new handles in here. I want to say thanks for you guys for coming. I'll be doing these broadcasts every month. I'll be doing a training on the Pro Traders Toolbox. So you're welcome to come every month, just sit and listen if you want, or you're welcome to participate. If you want to get a copy of the Toolbox, all you got to do is get a hold of me or Proctor, and we'll take care of you. Stefan says he left a YouTube video up here. I don't know what this is. I don't know what this is. Don't know what that is. Okay. All right. Any other comments or questions, guys? Anything you want to spend a minute on? We have a bunch of guys starting to drop off, so I guess we're done for today, but I just want to extend the courtesy if you need it. Okay, I guess we're done. All right, guys. Well, listen, my pleasure to work with you. Thanks for spending a few minutes on your trading day. This has been recorded, so I'll put the video up on YouTube sometime in the next 24 hours and make sure everybody gets the link so you can review it again if you want. In the meantime, if you're interested in learning more about the Toolbox or getting a copy, you know where I'm at. Also, don't forget to come to my weekly wrap-up. I'll have that on the line for tomorrow at 4:15. All right, guys, listen, thanks for spending some extra time. I hope you have a great day. I'll see you next time. Thanks.